Hello, everybody, and welcome to another episode of the Loan Officer Wealth Podcast. We are blessed with Andy Harris here today. Andy, thanks so much for being on the show.
Thanks for having me.
Right on. So, for our listeners, kind of break us down. I believe you're number 100 on the Scotsman's Guide this year, if I'm not mistaken, somewhere in and around that range. Congratulations, by the way.
Thank you. Yeah, I appreciate it. Yeah, I don't follow that too much as far as the overall nationwide. I'm more of a data guy, so I like to look at, as competitive as we all are. I like to look at like per capita. So like, what markets do you serve? How many humans live in that market? I spend half my time operating my business as the owner, so I'm not originating. I wish I was originating the full time, but I do what I can when I am originating. So yeah.
Awesome. So tell us a little bit about your story, how long you've been in the industry, a little bit of your history up until today, and then we've got some, I think, incredible topics.
Yeah, so I got in the business in 2002. Started in a retail company at the time, and was blessed to be their top producer in the Western region the first year, green out of the gate. I learned quick.
Really?
Yeah, I learned quick. It was more about my background was in fitness. I ran operations for Bally Total Fitness and Gold's Gym and personal training and all that stuff. I loved it, but it was just not a career choice, and I was really into housing and finance, and I started getting into that, studying and all that stuff too. So yeah, my first year I just got in green. I think it was just my ability to communicate and be. I have a little bit of OCD with organization, so I'd have a lot of very thorough follow through, very analytical on math and going through all the details with people. So the thing I learned early in my career is conversion. Everyone would always be like, oh, you have these goals of how many applications they were pulling. I'm like, well, what's the point of an application if you're wasting time and money and effort if it's not converted to an actual loan that closes? So it would be funny where we'd have these, back then, it was kind of crazy pre, financial crisis, but going through all that and being part of it was a good experience. I thought I knew everything in retail, and I went the independent route and was just mind blown by how much more the macro world has versus the micro world. But and I never looked back at that point. So basically, I started my business, learned quickly that I needed to become uh, an owner that could operate a business as a fiduciary, kind of, looking at the agencies versus the lenders or logos, as I call them. And I started my brokerage, as crazy as it sounds, in 2007, running at the financial crisis when everybody else was running away. And so, yeah, crazy stuff.
That is a really interesting. What was behind your decision to lean into the market in 2007, 2008?
Yeah, I got a little, I'm a big, just, I was just born with a level of morals and ethics. And so I got kind of disgusted the way the industry was.
Hmm.
And when I was about 3 years in retail, and then I went and got exposed to work for a brokerage for a few years, and it kind of opened my eyes to how things actually worked.
Hmm.
And I kind of started looking past lenders because it's all funny money to the agencies. So you got Fannie, Freddie, Ginnie, and the investors. And, back then you had all the non-agency, non-prime, subprime stuff, some of which was gross, and a lot of irresponsible lending and things that happened. It was just completely different market then. But I kind of stepped out of the industry for a little while. I got recruited back into retail for a very short stint. I really saw how messed up things were, and so I just said, I need to do my own thing and really structure a sound business with a new foundation. And I could see something was coming, something was changing. There was a lot of, especially when the attrition really started happening, we started seeing the collapse in the markets, and obviously the default rates increasing, the equity being stripped, and all the stuff that happened during 2008. Starting in 2007, before that, people thought we were nuts, but I started really studying and again using data. And so I'd start writing for a trade magazine or a couple of them for, I think it was almost 10 years, but I would write monthly articles for motivation, but then about every quarter or every year I would write on predicting the future of wholesale and correspondent lending for
Huh.
non-banks primarily, because there was so much rhetoric, there was so much recruiting, and just the retail net branching got massive. We're seeing a lot of that today in a different way, but yeah, so I was lucky to maybe the big man upstairs helped me with this, but I was lucky to get enough data to predict where everything moved up until today. And so everything that's happened, with the exception of how things have taken a left ethical turn in 2018 or so, I didn't predict that. I really was shocked to see some of that I can talk about, but yeah, that's kind of where we got where we are. We've thrived ever since then, and it's another tough market, a little different than before. But during that time after 2009 is really really started getting involved, vested in the industry, serving with AMB on the executive board, serving as Oregon Association of Mortgage Professional President. I think it was from 2010 to 12, and I was really heavy into the federal regulations, going through Dodd-Frank in DC for like 6 years or whatever it was. So yeah.
That is incredible. So, and I'm going to be out of my depth on this part of the conversation, but talk to me about looking at the regulatory side and working with Dodd-Frank and being more on that side of the business. What did you learn through that experience that you now apply to your mortgage business today?
Well, really all of it. I mean, and my biggest thing I learned through it was really how things work in Washington D.C. It's a little crazy, We we'd have days where you'd meet with legislators or with Congress people, and they would go to our events, but then we'd actually go to the Hill and have multiple meetings, all states representing the mortgage space, a very small group of us, but our biggest thing was to protect small business, the consumers we serve, and understand that the way Dodd-Frank was written was so poor that it was just the people didn't understand what they're writing. So there's a lot of unintended consequences that would have happened if it weren't for changes that the CFPB made after they're enacted through Dodd-Frank. And so we had a lot of wins. There were some things that I believe need to be fixed. Some where small businesses are treated different from certain large businesses, where the consumers can still be steered and things can still be done differently. But I think with time that people will see the data points. But what I learned early was that number one, grassroots is massive. No one sees what a lot of people the pain, the sweat, the money, and all the stuff we put into it. No one cares or sees that. So I just saw that being part of that grassroots, respect the people that put forth the energy at the time, because it would have been
Yep.
much different if they didn't. So, and then it was helped me just adapt to understanding the analytical math and the data on how these rules work. Because the problem with attorneys is they'll look at rules and read them, but they don't really interpret them the way we do as originators, because we know what they mean. You know what I mean? So attorneys are paid regardless if they're right or wrong. They're billing generally for time. They're not
Yep.
billing for accuracy. So unfortunately, with federal law, they enforce by or you learn by enforcement, right? So they'll write a rule that might be vague, but until someone's enforced that rule, you don't know the true meaning of it. And so I think so many people go through state audits and think, oh, I'm fine. It's like, well, they're not auditing LO comp and anti-steering and mini correspondent, all these different variables that we've talked about, um, which I think will be changing very soon from what I hear. But yeah, so it just helped me adapt to, it was a messed up world where originators back before the changes of 2010 when the Fed stepped in, and then 2012 when the CFPB solidified what the Fed did on comp. Unfortunately, some could steer the borrower to higher rates and fees and get paid more. Well, that was a problem. So how do you fix it? You've got to universally, know, paint with a broad brush and just fix the inability for the originator to do that. So I agreed with it. I do think there's some things that need to be fixed for the unintended issues, but that helped me just make sure I'm running a compliant, transparent business.
That makes absolute sense. So fast forward to today.
Mhm.
Tell us a little bit about your business. So first off, when you went on your own, were you the sole originator and business owner, kind of doing every job, every hat, and then expanded out to having, team members?
Yeah, so my ops manager that kind of brought over, she kind of heads our processing team. I worked with her for years before that, so we came over and she kind of helped build that operations sector on the processing side, because I'm not a processing originator. I don't think any originator should be. I think
Yeah.
there's a lot of time you need to spend prospecting. You can delegate processing and ops for that matter. But so yes, but I wear most of the hats when it comes to the other side of operating the business, which I'm more than happy to do, because especially starting a business, you got to keep overhead down. Just like today, I talk about essential and non-essential workers. There's a lot of people, unfortunately, that have margins that impact rates, that have salaries that are being paid that aren't essential. And so if you're not a producer, you've got to have that essential role. And I learned that early on, when I was starting a business. We kind of had a smaller, lower cost office. It was maybe 1,500 square foot space. We had like 10 offices in these, partition walls at the time. And we thought, oh, we'll scale out and do all this. But I learned very quick that, again, it's a per capita you want less humans doing more production. So
Mm,
that is, more production with each originator and more quality originators versus just massive recruiting and growing and all that. And people are learning that the hard way today. If they pay them accurately, I mean they're actually paying them some kind of base if they're not closing and they're not 1099 them illegally and they're W2ing what they're supposed to, all that stuff. But yeah, so I learned early on, and I've taken those uh, bullet points that I've built over the years into today too, because it's a similar situation, a little bit different where consumers are. But I think, yeah, I'm glad that I've had different perspectives on all kinds of volatility.
absolutely. Now, you mentioned something that I think is so key in the origination business is that, processors can process. An originator needs to be out originating and actually bringing loans in the door. That is the job.
Yeah.
So, what are you finding that's working in today's marketplace? What are you focused on to bring loans in the door today?
Yeah, so especially today, you have to change your mindset. Like if something's not working, you've got to shift. You've got to adapt to what the future looks like. One thing, going into this, I'll talk real quick on like having an assistant or a processor. If the originator delegates something to another party, they can do very high production with an efficient person in technology. You have to have efficiency in technology. The problem we've had over the years, you have a lot of team members and non-producers that are not efficient and they're not embracing technology, so they don't or can't do the level of production, or they're captive to maybe one lender or company where they're not able to navigate competition between lenders to help speed up all that process and have better technology and control. So I think once you learn that, you understand the better way of originating. You can have literally one assistant or a processor that you can justify in margin because you're getting more production because you have more free time to prospect. So I
Yep.
think that's the first thing to understand. You have to know that fine line. The other part is, we've always been not just prospecting for new business on referral partners. The biggest thing that a lot of originators don't have or have missed is the transition in consumers in the way consumers get data. So for over 10 years, more than 10 years, we've been very focused on consumer direct
Yep.
marketing as well as referral. And the reason for that is because we're slowly seeing a transition of the new generation of buyer finding data on their own, finding the home. They're starting to go to the lender before the realtor now. We're starting to see, you can see
That's
more
right.
data showing that support. That hasn't been the case before. So that's why a lot of these companies kind of call on realtors all the time, and they're not selective on who they work with. They're just desperate, and that's not the way to build a referral business. You do it by your reputation and them coming to you, preferably. But I believe that consumer direct and having a spread between referral, we have like a pie chart we use in our company. It's got referrals where you've got real estate agents, CPAs, financial planners, attorneys, everything kind of mixed, where you've got a good, you know, uh, I guess, diverse funnel coming in.
Yep.
The other pie chart is basically all the consumer direct stuff, online organic review. Well, the online organic reviews is like the connection of the glasses, because that's like a referral of someone that doesn't know you. So they're basically referring someone else they don't know. So it's an indirect referral.
Yep.
It's also tied with consumer direct and referrals together. It's like very, very powerful online reviews. So, but consumer direct can be all kinds of stuff that connects the two. So you can try to have funnels coming in and get leads, on your own leads you're generating on your website based off reputation constantly. Now, this market's a little different because 100% purchase primarily. I mean, there's no refis and people know that. So where do you target those buyers? How can you help them with affordability right now, which is the biggest challenge? What content can you put out there, video or whatever else, to navigate that issue? Just like temporary buy downs have always been around. Well, now they're a bigger topic because it comes back to affordability. How do you bring up more of the data points and show them, hey, how can we rebudget your family, scenario where you're prioritizing housing, and what is that comparison to rent over time and the financial benefits? That's what everyone wants today. The problem is you've got, baby boomers too. They got record equity. Some of them are paying cash now if they're moving up, but then you've got now from record equity, we're seeing record consumer debt, which happened
Hmm.
pretty quickly. And so now we're seeing just a transition where people are, with inflation, just having a hard time affording these payments.
Yep. No, absolutely. And so the consumer education component side of things, I think is absolutely critical because it gives you an asset that you can use and leverage for all aspects. So typically we break it down where you've got your past customer database or your database in general, just like everybody that you know. Then you've got referral partners, which is your matrix. That's realtors, but also financial planners, investment advisors, insurance, all of the wonderful referral partners that we've got. Attorneys definitely fit in there. And then you've got consumer direct. And one of the things that you mentioned really well, and where we kind of sit in the marketplace, is organic ranking. So we use AI to rank mortgage businesses in that map placement on Google. And then we actually do the database marketing for our clients, where we will send the emails and text messages and do the database marketing. And just like you said with the content, if you can put together a really good, helpful piece of content that helps people to understand what the market is, you can send that to your database, and in the same message still get 5-star ratings and reviews that go on your Google profile, but you're also getting your entire database to send that to friends, family members, coworkers, people that are in the market. So you don't, so many people look at their content strategy and it's like, okay, I'm just going to post this on my Facebook. Where if you're going to put the time into it, send it to everybody, send it to your referral partners, send it to the database. So do you guys have a holistic structure like that with your marketing where everybody gets everything?
Yeah, so years ago, I actually hired my brother in the business. I think it was 2012, and so he does kind of our head of marketing, and he's the whiz on all the website build out. I give all the content. It's all original content, all original videos and all the stuff we create in house, videos, content, all that stuff. And so he's involved with blasting it out to certain demographics, and we try to hit people a certain number of times without spamming them. Obviously, we try to just get it out to those that need that information. But our goal is basically to be, hey, if someone's searching in our local market or someone asks, how can we be front and center as the number one, influencer for the community we serve, because we're very kind of hyper focused on our market. And if we can be that, and then also supplement that with, lender competition to, keep margin and rates aggressive, consumers care about that stuff.
Oh, absolutely.
So that's where it's conversion too, because I used to use the analogy where like, the kids that you chase the girls around the playground and, once they stop and turn around, you're like, oh crap, what do? You jump in the bushes, you don't know what to, if you can't convert, right? Like you gotta think about like, hey, if I get all these leads and I'm investing money to market and I'm doing all these things. And once the consumer sees what I've got to offer, they're like, hey, this is, at the end of the day, I already know this because I'm an educated consumer. This is a Fannie Mae 30-year fixed. It's going to the same place. Why is your rate a quarter higher? Or why is your same rate 5,000 more? I can get this down the road. Nothing against you, but if I got someone the same or better, in my opinion, math is math, and I want to save the money. That's how the younger generation is thinking, and we actually agree with that. So the reason why we can't agree with that is because we operate independently. We're not selling a logo or a lender or whatever. And that's what I think people are learning today, but there's just all the other, unfortunate corruption about what titles mean. And it's more about, are people true, transparent fiduciaries? What are they actually doing? So, but yeah, so I think the foundation of how you operate as an originator is vitally important. The marketing is just something that you're using for what your true foundation actually is,
Yep, I could not agree more. And you touched on conversion, and you're very data based. So I'm very interested in your response. So do you track the amount of conversion that you get on your leads? And have you compared, like, let's say buying a lead from, say, like a Zillow or even a paid lead through social media, and compared that to people that call you after reading your reviews on your Google profile?
This is a good question. So we don't buy leads. And man, I haven't for a long time. I mean, back when I first got in the business, the company I work for did, we were actually one of the first, I think we were one of the first companies on the Zillow rate tables and even some of the bank rate when they came out with that.
Oh,
So
wow.
when Zillow first, this is way before they got into real estate and mortgage, right? When they first got involved, we were all about pricing engines. We love putting pricing engines in our stuff, being front and center, being small but looking like a really big company. So we would be, and our reviews would be all over these rate tables, and no one else was there. So like we were one of the first there, and then all these lenders started coming in, and then they wanted, oh well, we only want these macro multi-state companies. We're not going to be hyper focused locally, even though you tell them the value of what that is for the consumer. It's all money, right? Especially if they're public companies. Bankrate, same thing. Those were great sources at the time because we were so unique, like no one
Yep.
else was doing it. So when that shifted, then we said, okay, how do we mold to now generate our own stuff and try to get the organic ratings to come to us to compete? Obviously, you're not going to compete with them, especially with like Google AdWords and stuff. But how can we create something that's at a smaller scale but less expensive too, right? You're
Yep.
not funding into clicks, you're not doing all this stuff. So because that stuff was very expensive, but it converted, and it's really more of a matter of impressions and clicks and things like that. So now, the conversion tracking it right now is a little different because we every single time someone fills something out or comes to our site, they're giving reference to where they found us, but then we have to cross-reference and see, okay, where truly is this traffic coming from? So we're building out new metrics on tracking some of that. This market's different though because it's literally like so many people are on the sidelines because of affordability. So it's all purchase. I'd say most of what we're getting is referrals. There's still leads coming in weekly or daily, but it's just a matter of blending those two and figuring out, okay, let's really track this. What we found and we're trying to fix too is we're only focused on Oregon, Washington. We just added Idaho, so we're just Pacific Northwest. We've been getting a lot of leads from other states, so we're trying to figure out how that's happening. That's a little unique. So unfortunately, those we don't track conversion because we're not licensed there. So
Right.
I could find a good colleague, which is nice, and refer them out to that colleague and just let them know we're not licensed there. But yeah, so we're still building out those metrics. Usually on a busier market where you have all kinds of leads coming through where there's a lot more activity, that's where we have better data we can reference. But this is just a unique market right now.
Yeah. Oh, absolutely it is. But do you see a difference in somebody that calls you and says, "Hey, I found you on Google," as opposed to somebody who's just a lead potentially from, a rate table previously?
100%. Yeah. Anytime you get so we get calls all the time just from our reviews. So whether it's calls in the office, calls directly to originators, emails, those are organically coming all the time outside of our lead capture on our website. And some are kind of the same thing because everyone's looking at reviews.
Yep.
So the nice thing about the review is that it's a icebreaker. They already did their research. They already know who you are. We have a lot of information and data on our website, so we're very transparent to give information up front. And so those conversions are massive. If those people apply, I mean, I can't think of any in the recent months where they haven't converted. So those ones are very powerful, and that's why I believe reviews are so organically powerful. Even if someone's referring you, they're still going to look you up, and you better be accessible with some good feedback from other consumers. So I think a lot of it would, again, they would click on us and reach out to us with our tied. So there are some in their quotes with views. It was a little different. Like I would never call a lending tree farmer weird leads that way, so I can't really compare the two. Um, but yeah, I just the over solicitation and it's kind of like trigger leads today, which are horrendous. Like it's just abusive to the consumer. Like it's not helping them.
Oh,
So yeah.
100%. Yep.
Yeah.
And Andy, thank you for being so generous with your time. I do want to pump your tires just a little bit. 274 5-star ratings and reviews on your Google profile, which is absolutely amazing.
Yeah.
Final question, because those ratings and reviews, they're the future of marketing, I believe,
Yeah.
especially with what we're seeing with artificial intelligence and how important those are when they factor into the ranking algorithms and getting our clients ranked. So what does your process look like for getting referrals from the people that apply, and then how do you get those 5-star ratings and reviews from consumers?
Yeah, so the main strategy is you have to have, obviously something where it's a pre-written template that you test and it works. And I have a video that I send out to them, just congratulating them on their closing and then asking for the review. We have links that we work with a third party that hyperlinks to all the other areas. Because like what you mentioned was the Google reviews, there's multiple other places we want them to share that information to, which we then cross-reference. They come back on our website, which I think is 500 some odd, 5-star reviews, which that motivates. We love reading what they say because that's what keeps going. It's very, very motivating. One thing someone brought up, which I thought was interesting, is that when you ask for a review, a lot of them do it on the day of closing or after closing, but people are so busy moving that sometimes they don't get to it right away. you got to follow up. We have text reminders that we send them as well with a link. Some people said, hey, when they get clear to close, because we have a
Yep.
clear to close email we send, the video congratulates and everything, maybe ask for it then because they're getting their, things ready to sign loan docs and they're seeing your closing emails. Like maybe they're more motivated, like, hey, it's exciting. Let's go on this link and review now. So we're testing that to see if we get more conversions on reviews quicker by doing it at clear to close versus at or after closing, which I think is interesting. So we've shared that with some agents too. Like, hey, if you're trying to build more reviews, maybe try that. Maybe even if you're at the closing table with them, hey, I'm going to send you this link if you don't mind going on and sharing your feedback. You got to ask for it, and people love to do it. And it's it's motivating for you to see too, and it's great. Yeah.
Yeah, absolutely. And you will get far more reviews asking at clear to close than you do post closing. We've tested that, and absolutely going to see a bump. The other process that we recommend is having an automatic follow up with the agent after the deal closes. So we have we teach our people to be reaching out to the agents on both sides of the transactions. And then obviously the one that you worked is the one that you asked for the 5-star rating and review, but you reciprocate before you ask for it. So you go ahead, you leave them a 5-star review on their Google profile about how great it was to work with them, and then you ask them to leave you a review on your Google profile, because that's 2 reviews from every transaction rather than just one.
And I think agents and the one thing that's interesting is if it's business partners or business people, sometimes you might have a mixed view on, like, if an agent's reviewing a mortgage company agent, if that's not a true client of theirs. It's a little bit of a gray area for me personally, but outside of that, I think the consumer reviews are the most vitally important because they're giving feedback of someone that was an actual customer. Because there's too much conflict, I think, sometimes between agents and mortgage people, especially if you're sharing reviews. But I get what you're saying. I get it.
Yeah, absolutely. Well, Andy, thank you so much for being on the show. Absolutely phenomenal. Congratulations on your success.